Good afternoon, everyone. Thank you for joining us on this rainy February day. Hopefully, you're all staying warm and dry. We're going to go ahead and get started. I still see some attendees kind of trickling in, but we're going to try and respect everyone's time and get going. If we could go back to that first slide real quickly. For those of you that are new to our EAC, the webinar functionality allows you to raise your hand if you have questions. And also we have the availability of an email address if you are uncomfortable with raising your hand. And that email address is advisorycommittee@calstrs.com. Also, you can see that there is a link and a QR code on this slide. If you have yet to go find the materials, the QR code will take you to the point on our website that has all of the materials for today's meeting. And that link, again, is the blue one there that you find our agenda. That's where all the materials will be. So again, if you have questions during the presentations today, we'll ask you to raise your hand and then we will unmute your microphone and have you ask your question. And I do notice that we have a phone in listener. So for that person who can't use the raise your hand functionality, or if you're uncomfortable using that raise your hand, again, that advisorycommittee@CalSTRS email address is what you would use. And we have folks manning that box and we'll bring that question to our meeting. Go ahead and go to the next slide. Alrighty, so this is our agenda for today. We have not a super heavy agenda for you, but hopefully very informative. And then again, at the end of the meeting, we will have an open forum for you to ask questions about today's meeting. So with that, I think I will be turning it over to John Hammond from, again, we can go ahead. We already talked about that, from our employer readiness team to talk about pension solution and just give a short project update.
Well, thanks, Kim. Good afternoon, everyone. Let's go ahead to the next slide. I just wanted to start off by mentioning our recent employer readiness webinar that we hosted back in November. And all I'm really kind of doing today is highlighting a few of the topics in that presentation. I was looking at the attendance of people coming in, and I noticed that there's a lot of people here who are also in that webinar. But if it just happens that you missed it, I highly recommend that you go to the recording and watch it, or watch it again. I mean, it's great entertainment. You can find that on the employer support portal, and that's employersupport.calstrs.com. I have the URL on a future slide, so don't worry too much if you didn't catch all that. And look under the employer toolkit, and you'll see the recording of the November webinar there. It was in the webinar that we announced the new go live date. That's going to be fall of 2025. The specific day is still unknown, but we will be communicating that out, of course, once it's available. Also during the webinar, we discussed potentially postponing the use of the new file format at go live due to pending legislation. That legislation it's likely to change some of the new file format values. So we didn't want you to start using the new file format when we had imminent changes that were soon to come. So we collected a lot of feedback from employers back in November and December on how this would impact your business and your readiness. So a big thank you to everybody who engaged with us. We really appreciate that. I can tell you that CalSTRS is moving to make this a official project decision. And we're just kind of waiting on the final approval, to be honest. So this decision will mean that all employers will continue to use the current files they submit through SO today, like the F496, the VDF, the MR87, but you'll do that in the new SO environment when we go live of fall of 2025. Okay, so same files, right? So though you'll be submitting these same files as today, when the new system goes live, the new SO environment will have some different business rules than the current SO that you use today. Not all, but some. And so it will be a good idea for you to get familiar with these new rules by uploading files you currently upload in SO today, to upload those into the employer readiness environment, which, if you don't know by now, is the employer testing environment. And it should give you a good feel for the new system and the new business rules that are there. Lastly, we know that there's been a lot of staff turnover on your side, and it might have been a while since you've had a employer readiness visit. So feel free to schedule with the employer readiness team. Let us know what you need, and we'll schedule a Zoom call with you. Next slide. Here are some references. There's the employer support portal URL, and that's where you can get the November webinar. You can access the employer readiness environment, take some computer-based trainings on the new system job aids. And there's also our employer readiness email where you can contact us if you'd like a visit or you have any questions about pension solution, about the new system. We'll be happy to answer that for you. So I have just a little bit more time, so I can entertain some questions. Otherwise, we can just keep going with the agenda. Looks like Ramona has a raised hand.
Go ahead, Ramona. You can unmute. Oh, I saw the mute come off and then go right back on. So you might need to hit it again.
Can you hear me now?
Yes.
Oh, goodness. So, John, did you say, and I just missed it,
Yeah.
for that test environment,
Mhm.
how fresh is the data that's in there?
Yeah, it's we are refreshing that on a continual basis. So let's see, right now it has let's see, what is it, February? So we should be deploying a new a January refresh date at the end of February. Right now, I think it has a November date. But yeah, we're going to be refreshing it on the even months of this year. So February, April, June. So we'll keep it fresh.
And then do you do that at a certain time of the month, a certain day every month, or does it vary?
It varies. You know, it really depends on you know, what they're doing is they have to pull the data out of the current start environment, or I'm sorry, out of our current pension system. We have to take it out of there and then convert it and then put it into the ERE. And sometimes it's a little tricky. There's a timing issues involved. And so we're communicating that out. Once we find the date that we're going to deploy and the date of the data that's going to be deployed, we post that on the employer support portal. And we
Thank
let
you.
you know as soon as we can to let you know so that you're able to sync up your payroll systems for testing.
I see Teresa has her hand up too. Go ahead, Teresa.
Thank you. To add on to Ramona's questions, right now, the test environment for the new file format, well, we're set to the new file format in your test environment for the new system. Are you going to be resetting all employers back to the old file format?
Yeah, you mean the in the testing environment in the ERE?
Uh-huh,
Yeah, we will. Are you set on new file format right now?
yes.
Okay, yeah, we'll take care of that. Once a new file format file comes in, we can't revert it until until we deploy a new refresh. So it sounds like we'll need to. I believe it's on the employer support portal right now. I believe we have the date of our next deployment. I think I can't remember. Sorry. But once we do that refresh, you will revert back to old file format, and we'll leave it there.
Okay, so you plan on going live with the new file format after the regulations that Jocelyn will probably go over later is completed?
Yeah, that's right. So right now we're not quite sure. Right now we don't know when, we don't know how the new file format is going to be impacted because we don't know exactly what the legislation is going to, the final rendition is going to be agreed upon. So we kind of have to wait for these things to flush out to really understand how the new file format is going to be impacted. So we'll be constantly keeping our eyes on the progress and any changes that occur. We're going to try to figure out what that would look like in the new file format. So yeah, so it's going to be ongoing work to do that.
Hmm.
Yeah, and once we're done, we're gonna once we know that the legislation is finalized and the regulations are finalized and the new file format is finalized, then of course we can start talking about how we're going to implement that. And
Okay.
that's a conversation for another time.
So what you're saying, if I'm hearing you correctly, is if the regulations were not a thing right now, the new file format is not final? If nothing were to have been changing right now?
Oh, no. If it wasn't for the legislation,
Okay.
the new file format is finalized. But the new legislation is going to impose changes on our finalized new file format. It has to change because the law is going to change.
Right.
And so, but if it wasn't for legislation, no, new file format is, it's done. It's finalized.
Okay.
It is done.
I'll talk to you offline about some other concerns then. Thank you.
Okay, yeah, no, please do. Reach out to us and we can schedule a call to talk through some other things, of course.
I don't see any more hands raised for you, John.
Okay, well, thanks, everybody. Have a good afternoon.
Thanks for joining us. All right, next slide. So we're going to bring up Freddie, who's going to talk about our AB 1667 invoices. Take it away. You're muted, Freddie.
And I just did an unmute. Okay. Hello, everybody. Good afternoon. And so today I just like to provide you with a brief update on our current invoicing and payment. So on February the 2nd, our team made available the second invoice regarding AB 1667 to all employers. And this notification contains information regarding overpayments established between April 1st and June 30th of 2023. A total, I'm sorry, can you please go to the next slide? Thank you. A total of 28 invoices were posted via SAW as a secure message to all the employers who we have in our information list. And our information list basically has all the individuals who express their interest in receiving invoices for AB 1667 or payments. We also follow up the posting with an email to the same contacts, letting them know the invoices are available for viewing on SAW. And the payments for invoices is expected to be made within the 30 days from the date of the notice. Okay, and until the ACH process goes live, we ask you for payments to be made via check. And the next presentation will be, they will be talking about the ACH updates. Now, please, the next slide. Okay, so in this slide, let's just take a look at the schedule of invoices. So this outlines the dates for the future invoices. So the next invoice will be available on April 1st for the overpayments created between the period of July 1st through September 30th. Now, you might be wondering about invoices related to system error. Well, the only update that I have is that our team is working on the project and the process is still in progress. It's still in progress. And that pretty much concludes my update for the invoices and payments. So thank you for your attention. And as always, we just look forward to continue our collaboration. So I think we have some time. So if you have any questions or concerns, please feel free to ask.
All right, I see some questions. Hold on. Ramona, go ahead and unmute.
Okay, I'm not sure if I'm the only one that had difficulty hearing that presentation. So is there a way that we could receive a copy of at least the PowerPoint presentation?
We can actually put this schedule of invoices up on SEW for you. I can have my staff do that, and that way you'll be able to see download or get a copy of this, if that would be helpful, Ramona.
Okay. And again, just to address, I'm not sure if anyone else was able to follow the presentation because it was very difficult to hear and understand.
Yeah, there was a static issue. Are you getting the same thing when you're
There
hearing
was like
me?
a tapping type.
Yeah, I heard it
type
too.
Something, so it kind of drowned him out.
Yeah, so I mean, if you're not getting it when you hear me, I'll just do a quick recap because I think, really the key communication here for you all is when those invoice dates are coming out and what time periods they're going to cover, right?
Correct.
So this April, you can see basically the timeline of this is that 6 months post a quarter, right? So the Q3, July, August, September, 6 months later is when you'll get the invoice for that particular quarter. And that's going to be the cadence of these particular invoices, is that when a quarter ends, you can expect 6 months later to receive the invoice for that quarter.
Okay.
So that's really the main point that we wanted to make here for you all, so that you can understand, the timing of when these are going to be coming here in the near future. Does that make sense?
Yeah.
Okay. Janelle, I think, is our next hand. Yeah. Janelle, if you want to go ahead and unmute.
Okay, hello. So my question has to do with the dollar amounts for these invoices. So the one that we just received last week, I think, was like 4 cents.
Mhm.
And the one prior was like 60 something cents.
Mhm.
So is there any threshold or anything where these are going to be waived, or where we can lump them in with another one? I just know us, last time we had to physically request a check for 60 something cents because ACH wasn't an option. But I have a feeling if I send an ACH request through to my treasurer for 4 cents, there may be a problem. Like, what are we doing? So
Freddie, do you want to address that?
Correct. Yes, you understand the question, because there's a few of receivables that are below $5, and for those ones, we just give you the option. You can either just don't pay at the moment until they just grow up to $10. The interest will accrue, but for that amount, the interest is pretty much insignificant. So if you're okay with that, or you can, we can figure out the way to pay. But as of right now, we don't have anything on the law or anything on our statute that allow us to write off or to discharge this type of receivables.
And
Okay.
I do know, Freddie, we'll be having ACH in the future, right? It's not
Our
that-
next, right now, just a check, correct?
Right.
You're correct. Right now, as until the ACH process goes live, we only accept checks. So for
Right.
the ACH process, our next presenter will take care of that, and will give you more details about any of the payments.
is
that-
there is there an option for cash? I mean, I'm just thinking, like 4 cents.
I don't believe we have any way to take cash in that respect from you all, but like Freddie said, if you want to wait until that amount hits a threshold that's easier for you all, there will be some interest that will accrue, but on 4 cents, I mean, interest on that's not going to be a whole heck of a lot. So
Yeah.
Right.
Okay.
Correct. Like right now, interest, we have it at 7% on the annual basis. So that's pretty much nothing. The 4 cents will not grow.
Okay. Thank you.
any other questions on the 1667 invoicing? Great. Okay. Thanks, Freddie. And then I believe that will take us to the ACH updates, which hopefully will answer some of those questions. And we're going to bring up Daniel and Jennifer. You can go ahead and go to the next slide.
All right. Hello. Good afternoon, everybody. Hopefully you can hear me okay. Again, my name is Daniel Garzon. I'm the Treasury Manager here at CalSTRS, and co-presenting with me is our Treasury staff, Jennifer Ellis. And on today's agenda, we'll be talking about ACH and some of the enhancements we have coming up for ACH. The first item here on the agenda is a payment confirmation update. So I'll talk more on that. That's basically for our users that use our PayCal site, or also known as ACH debit. And our second item on the agenda is today to talk about what essentially what Freddie just spoke about regarding the AB 1667 enhancement for the over benefit payment invoices and the enablement we have now coming up for ACH. Next slide. So coming up with the after some user requests and obviously some enhancements we made to our website, is that we are enabling our users to get an email notification after a successful payment has been scheduled. And that's scheduled to roll out in early spring. We're working with our partners on testing at the moment, and we should have that enabled. For folks that use our IVR, or also known as our interactive voice response, you will be able to receive the same email notification, but that's scheduled to roll out in early summer. And for all existing users, by default, you will receive these email notifications. There is an option to enable SMS notifications. So this is via text messaging, but just keep in mind that rates could apply based on your mobile plan. And you do have to enable, if you look at the screenshot right below, you do have to enable that by clicking on that box and putting the desired mobile number. Next slide. Now moving to an enhancement we have coming up for ACH debit employers. These are employers that use our PayCal website for payments for the overpaid benefit invoices, also known as AB 1667. Our targeted release date is looking like March 1st. And we'll actually place an announcement of the actual release date and on the SO portal and also on the PayCal portal 1 week prior to release. There are some mandatory fields that are required, but one thing to note on the left illustration there, this is a new payment type that you'll see they're highlighted in red. It's the 7th item, so it's called employer paid benefit overpayment. Once you select that payment, you'll be taken to the next screen, which is the one on the right, to actually make the payment. And the required fields are the ones below. These are the payment amount, the debit date, the report source number, the invoice number, and the issue date. We are actually going to go through an actual live demo of the payment website and the enhancements with Jennifer Ellis pretty soon. Next slide. So we're going to go ahead and move over to Jennifer Ellis, and she's going to walk us through the actual payment site. Take it away, Jen.
Hi, everyone. This is Jennifer Ellis. I'm going to be taking over for the live demo portion of the presentation. Hope everyone can hear me. What you're seeing right now is the PayCal site that when you log in as an employer, this is the landing page you see, which is select payment type. So currently the first 6 are payment types that's currently available to you. Some employers do have elected to only have a few shown, but if you see the 7th payment, which is the employer paid benefit overpayment, this is the new payment for the AB 1667 invoices. So if you go ahead and click on it, it will take you to the make a payment screen. And so the payment, so I'm going to go through actually scheduling a real payment. This is our testing site. So it's, again, not currently live. So the payment amount, let's see, is going to be based on the invoices you receive. So I'm going to show you an example of the EBPO invoice. This is just the top header part. So the total amount due right here to the left is $100. Okay, I'm being told we can't see the invoices, but the invoice is $100. We're going to enter it here. The debit date is going to be the next available date. So it automatically populated for you. So the next date that it could be submitted be for February 8th. So if you submit this after 3 p.m., it's going to be the next business day. So the report source number is going to be, for example, for a county, it's the 2-digit county number. So for this example, I'm just gonna put 10, but for a district, it could be up to 5 digits for the report source number. And that's gonna be matching your EBPO invoice on the right side. So the next field is the EBPO invoice number. This is gonna be a 12-digit number on the right side, top right side of your invoice. So I'm gonna just put some random numbers here, and then the invoice date is going to match your invoice also. So for the, I'm going to put the latest one, which is just January 2024. It's just going to have the month, excuse me, the month and the year. So once everything is populated, you would just push continue. And this will take you to the payment verification screen. So you will want to do like a final review to make sure everything inputted is correct. And then once you are good, you can push submit payment. If at this time you notice, oh, the invoice number is not correct, you could push edit payment, and that will take you back to the previous screen where you can make any changes you need. So once you push the submit payment, it will give you the payment confirmation to let you know that this payment has been successfully submitted, and you want to print or save this page for your records. And then you could, again, click new payment if you have any additional payments you want to submit. So I'm going to stop here. Apologize, I wasn't able to show you the sample invoice, but I wanted to stop here to see if anyone has any questions. I could go back on any of the screen. Okay, I see we have from Rosanna. I think you hopefully go ahead and unmute.
Hi, Jennifer.
Hello.
Super excited about the ACH because checks has not been fun. But my question is in regards to the report source, because I know for me, there's been a couple different report units on each of our invoices. Some of them have
Correct.
been like how they were sharing previously, just a few dollars. Some of them have been like $15,000. So you are wanting us to pay each individual report source. If we go ACH, we would have to do each one individually. We wouldn't be able to just pay the full charge of all the total sum of them in one swoop per se.
So from my understanding, so on the invoice on the top header, it has the report source, which is the counting level, and then underneath is where it has the report unit, which what you were saying, listed of the different units, report unit, and then their amount.
Oh,
so
awesome.
on the
So it's
you would,
just ours. Okay.
yeah, so you want to
Got it.
put your report source number as on the invoice,
Okay.
and then on the right side it has the total amount due, and that's what you would submit.
Oh, good. So it will be all in one. That's
Yes.
perfect.
Yes.
Thank you.
You're welcome. Okay, we have another question or two. I think I saw, was it Ramona first?
Hi.
Hello.
So are we able to pay a portion of an invoice? So if there were different units and we may have payment from one, but we haven't been able to get the payment from the second, are we able to make a partial payment on the invoice?
Yes. So you would, for the report source number, you would still put the one that's on the invoice, but you would just adjust the amount to what you are paying at the time. And then you can make multiple payments for the same invoice number. So just making sure that you use the same invoice number so that we can make sure that the accounting will apply it to that invoice, all of those payments.
Will it get credited to the correct unit, or does that not matter?
So from my understanding, the invoices, everything is billed to the report source. So it will be paying off the invoice that's billed to the report source.
Okay. Okay.
Okay. And then we have Rosa. If you want to unmute.
Rosa, are you able to unmute? I'm wondering, there we go. Okay, you're unmuted, but we're still not hearing you. Rosa, I'm not sure if you're having sound issues on your end, but if you maybe want to send your question to the email box, the advisory committee at calstrs.com. We're not able to hear you, and I can see that your microphone is unmuted, so I'm not sure what's going on. Okay, any other questions for Daniel or Jennifer?
Okay, so that ends the live demo portion with me. I'm going to send it back to Daniel for the rest of the presentation.
All right, thanks, Jennifer. And this next slide here, I wanted to address for those employers that are on ACH credit. This is again applicable for the employers that paid for the overpaid benefit invoices. And just a reminder, these are employers that pay either through their banking partners or through their ERP system. So for those employers, this new payment type will be again released on the targeted date of March 1st. We'll also display on the SO portal and on the SO portal 1 week prior to release. Now there is a little bit of a difference when it comes to the addenda record that you normally send to CalSTRS for other payments. So with this particular invoice payment, the ones that are highlighted below in the tables are the required mandatory fields for these particular invoices. Those are employer code, payment type, and invoice number. Now the payment type you'll see on the right-hand table is actually the code is 07. So that's what you'll input for the payment type. The example below of an addenda record is an example that showcases an employer code as 01000. There's the asterisk, followed by the payment type 07, asterisk, and then followed by the invoice number, which in this example is just all twos. So that's the only really additional item that's required for these particular employers that pay via ACH credit. Next slide. So in conclusion, we are updating our ACH debit user guide, and that will be available on the SO portal as well as our payment site 1 week prior to that March 1st release. An updated ACH credit file specification will be emailed to employers that are enrolled on ACH credit, and that will be sent out again 1 week before release. If you have any questions, feel free to email us at any time, and we can help. We'll be more than happy to help you walk through the whole process. I do have a little time, so I'll open up the floor if you have any additional questions for myself or for Jennifer.
All right, I think you're in the clear, Daniel.
All right, thanks very much.
Thanks for joining us. I believe our next presenter will be Joycelyn Martinez-Wade doing our legislative and our regulatory update.
There we go, unmuted. Good afternoon, everyone. Joycelyn Martinez-Wade, Director of Governmental Relations, and I'm here to let you know that the legislature began in early January. The deadline to introduce bills is February 16th, so at the end of next week. And actually, from my experience, there haven't been that many bills introduced thus far. So I only have one numbered bill for you on the presentation. As you can see up top, the two at the bottom are, well, SB 252 is a 2-year bill from last year. We're in the second year of a 2-year session. So that's the fossil fuel divestment bill that's still in the legislature and could move forward in the future. So it's still alive and in the second house in the Assembly Public Employment and Retirement Committee. And HR 82 is the weapon GPO repeal bill at the federal level in Congress. So that's also still out there. But at the top, we have our housekeeping bill for 2024. It has not been introduced yet. I know we've gotten to speak about the fact that it will be making minor changes and updates, clarifications to the billing process for service credit purchases and redeposits. So largely on the member side, and we are broadening the language for federally required minimum distribution timeframes for beneficiary distributions, again, really on the member side, but they keep changing those RMD requirements at the federal government. So we want to refer to the law instead of referring to a specific timeline. But we'll get you that bill number. It has to be introduced soon thereafter next week because it will be a committee bill from the Assembly Public Employment and Retirement Committee. So we'll get you the bill number by the next EAC meeting. But I really want to focus the time on this legislative update of bills from 2024 on AB 1997, which was introduced by Assemblymember McKenna. She's the chair of the Assembly Public Employment and Retirement Committee. So we're pleased to let you know that she's the author of our CalSTRS sponsored bill on credible compensation simplification. So the bill is out there. You can find it on the Leg Info site. If you look at it, what you'll notice is that it doesn't look like hardly anything's changing. So it touches on several code sections dealing with credible compensation and credible service. And what it does is that it provides that those changes that we're making are effective upon board authorization based on our capacity to implement the changes. And it's no later than July 1st, 2028. So you'll see some italicized language about that. And really it's about making current code sections ineffective upon whatever that date is and new code sections effective upon that date. So the second occurrences of most of those sections will be different language than currently exists. So you have to look at it really carefully to see what the changes are exactly. If you do want to reach out to me directly or through the advisory committee email, we do have a version of the language that looks like it's amending current law, which sometimes is a little bit easier to read. But this is the culmination of a work we did with a work group, including employer and member group representatives, to address, as you know, a lot of the complexities around our credible compensation and credible service laws. And you know that this can cause difficulties with reporting from your side of things. Audits may pick up errors. Those errors can result in adjustments. Those adjustments can result in benefit changes to members, and sometimes that can be pretty unsettling for members going forward. And so, as we talked a bit about AB 1667, dealing with a lot of the back end pieces when there are overpayments, we've just spent quite a bit of time on that. This is dealing with the front end and making sure our law is as understandable as possible. And so we definitely ask you to take a look at it, send questions, let us know if you see something that you think could be even more helpful. But I will run through basically what the pieces of the bill are. For creditable service, we are moving away from the list of activities that's there. You probably know that sometimes it will take a lot of analysis to say, what's the member doing? What are their activities for the day? Is their full-time schedule made up of all those activities? Or are they doing something else part of the time that doesn't fit the list that's in the law? So we're moving away from that, and we're going to a position subject to membership, which still has to be a certificated position. And you'll see in the language that we're leaning on what a governing board adopts in a resolution, what's in a certificated collective bargaining agreement. For community colleges, there's some pretty clear definitions of academic employees, academic administrators. And so we lean on those, and you'll see some of those in current statute, but that's what we're going to have for a position subject to membership. And it's about what's the person's position, they're performing enough time in that position that gets them to be a member of CalSTRS, going away from looking at what they're doing every minute of the day. So that's largely the piece on the credible service side. On credible compensation, you know how those regulations and the statutes can be quite confusing. So we're really moving toward 3 types of compensation, and 2 will make up what we're calling base pay. And that's salary, which we're all familiar with, which would have to be in a salary schedule or employment agreement. And then special pay, which is ongoing pay many times for having advanced education or being in a position for a certain length of time, sometimes referred to colloquially as a longevity bonus. And so the base pay made up of salary or special pay, again, both ongoing types of pay, would be part of compensation earnable, and that in turn would equate to final compensation for members who are retiring. The third type is what we're calling supplemental pay. And this would be any other type of pay that a member is getting that is not specifically excluded from credible compensation. And some examples of what's specifically excluded, and you'll be familiar with these, are like fringe benefits. Somebody's paid to cash out their vacation and or sick leave those don't come to us. They are not creditable compensation. And so if they're not on that list of what's not creditable, they would come to us as supplemental pay. And what this is going to help us do is actually combine the definitions of credible compensation for CalSTRS 2% at 60 members and CalSTRS 2% at 62 members. So this is members subject to PEPRA and those not subject to PEPRA. And so we're looking at consolidating those definitions, making sure that we maintain the different benefit structures for calculating retirement benefit. The compensation caps are different for those two groups. So some of those pieces remain, but really we want to see regular compensation that is ongoing, be able to count towards that comp earnable and final compensation. You'll know right now if something's not paid each pay period, it's not creditable for a 2% at 62 member. And we want to move away from that if it's paid regularly. And again, that means we have contributions coming in that can be invested and then pay for a lifetime benefit when someone retires. So those ongoing pieces, again, count toward base pay and the compensation earnable final comp. And then supplemental pay can be other things, one-time payments, things like that, that don't go to DBS currently for our 2% at 62 or PEPRA members. But because we have that type of cash balance plan available, we can send supplemental pay for all of our members to the defined benefit program. I think it's really great that we'll be able to do that. It could cause a slight increase in DBS benefits for some. So that's, and then being able to have that ongoing pay that's not paid each pay period counted for our 2% at 62 members is also a slight increase there, but it's all within the definition of PEPRA and what is ongoing, what is a supported amount of compensation that can be part of a benefit. And also want to let you know that if someone is part-time and doesn't earn a year of service credit, they would be able to earn service credit from all other pay types. So this is kind of the biggest shift, I think, philosophically in how we've looked at things. We've talked about earning service, and that, of course, creates your service credit. How much time are you working? But you know that if somebody has more than 1 year of service, then they can fill out, perhaps if they were on dock, they can fill out their year and make sure they have 1 year of service credit. So we're looking to be able to do that with supplemental pay. It just won't change the comp earnable and therefore final compensation. So there is that possibility of additional service credit, but no change in final compensation. This alleviates trying to come up with annualized pay rates for additional assignments. Sometimes those pay rates as they're created can throw off the benefit. They can increase it or decrease it depending for those members who are part-time and they get their year of service credit filled out by an additional assignment in the current world or in the future world by pay that's going to the defined benefit supplement program. So I'll stop now because I see a hand raised and then I can get back to the other provisions. So I see James has a hand raised.
I was just curious in regards to this specific, which I know has been in the works for a little bit and looking forward to it going through. Has there been or is part of the talks with this or maybe separated from this regarding the contribution rates for the employees matching what they pay for their base pay as well, so that we're not issuing the refunds every year?
You read my mind, James. That was, wasn't quite the next thing I was going to get to, but I will jump there because that is definitely a provision of this bill. Thank you.
Thank you.
So that's, I'm so glad. And I think this may be something that folks are definitely will be excited about. I know there used to be chatter about this when we were live and in person downstairs in our conference rooms. So what will happen is when members have contributions going to their defined benefit supplement account, right now, the contribution rate is less than for the defined benefit. And so we return those excess contributions to you, define the members and return to the members. So what this bill will do is keep the excess member contributions, as we've called them, it will keep those in the defined benefit supplement account. So then members will have those in their accounts. It'll earn interest over time. It'll be part of their DBS benefit when they retire. So that should take some workload off your plates. We will still be returning the excess employer contributions to you. So whatever processes are associated with that part of the return of excess contributions on the employer side, you'll still want to keep those up. Okay. Well, good. We jumped to the end of what I was going to say about this bill. But the other piece I wanted to mention is that there is a requirement in there for the annualized pay rates and salary to be listed in a publicly available pay schedule or in a publicly available agreement, as well as the special pay. And this allows us to consistently recognize what should be coming into the system to provide for our benefit calculations, service credit calculations, and all of those things. And another piece I'll mention is that this, again, we have the potentially delayed effective date that's accounted for in the language. We'll watch this move through the process. Really hope it makes it and gets signed. There will need to be cleanup legislation, and there, as you know, we have that for 2% at 60 members, we have credible compensation regulations. So if we are successful, those will need to get updated as well. So those future efforts will be connected to this bill. Any questions? Or anybody want to hint at something that I should have mentioned and bring it up now, because that was great. Okay, I covered this slide, so we'll go. Oh, I see a question, Talina. Sorry, going back.
Hi, can you hear me?
Yes.
Okay. So with the contribution rates and not having any more excess refunds for member-only district, are we still going to continue having DBS only payments? Or is that just DBS gonna just go up part of supplemental pay, and is it gonna be considered subject for both the 2% at 60 and the 2% at 62 employees?
I may have lost the last part of your question, but I think we're working out the technicalities of, will there be a direct payment? We know one-time payments currently, they're limited term payments, go directly to DBS. So I think we have to get all of that worked out. But we can come back to you, obviously, with more details on how that will work.
Okay, and then so payments that are considered outgrowth today are not going to require any pay rates to be reported with them, and they're going to fit under supplemental pay. Is that correct?
That is correct. So we will have the main assignment that will have the annualized pay rate. And then that could be full-time, could be part-time. If it's full-time, that's where everything's coming from for the member, obviously. So their salary and special pay, and that will equate to comparable going forward. And if somebody has additional assignments, they'll still be going to DBS. But if somebody's part-time, then there will be service generated from the contributions to DBS, but we'll be using the annualized pay rate from their main assignment, the position that's subject to membership.
Okay, so we wouldn't necessarily have to have a reporting line that has the pay rate, the outgrowth earnings. It's the assumption is whatever their permanent assignment, full-time or part-time, whatever salary that's associated with those earnings is going to apply to all the supplemental. And that's how you're going to calculate the service credit.
Right. So the annualized pay rate for that main assignment, the position that's subject to membership, will be what's used for that. Yes.
Okay, great.
And then I'm getting a note that from what we know right now, that we won't have limited payments reported directly to DBS anymore. There'll be supplemental pay.
Supplemental pay.
You're
Okay.
ahead of me, Talina. Thank you.
Okay, thanks a lot.
Okay. Well, I will move on to the next slide, but I'm still here. So any questions that people think of as that sinks in, I'm ready for them, I think. On implementation from last year's legislation, SB 327, of course, is mostly a member-facing bill. It has to do with how far back they can backdate their retirement benefit. And so we have to get this implemented by January 1st, 2026. And we're looking to try to do this implementation as soon as possible. I don't have a for sure date for you yet, but we are working on that. And then for SB 765, and this is probably the one you're most interested in on the post-retirement earnings limitations, what I can tell you is that with the new calculation for the annual post-retirement earnings limit, starting July 1st, 2024 through June 30th, 2025, the annual post-retirement earnings limit amount is $74,733. So 74733. $74,733. And you shouldn't have to memorize that yet. We will be getting out a directive. So I'm in the process of actually reviewing that. That's in my inbox right now, which will have that detail in it, as well as the new process, and I guess it's not exactly new process, but the new pieces of the process for the exemption from the separation from service requirements. And so you'll be able to see those details when the directive's released. The form will be updated as appropriate for the changes that were made by SB 765. So I have that. Now I'm just going to go to the next slide real quick because we basically covered this, but you heard the updates on AB 1667 implementation from those who presented earlier. So that's from 2022. I'll stop for any questions there on implementation efforts. Okay, next slide. I think it's on regulations. So we'll go to the next one. Okay, great. Thank you. So updates on the CalSTRS 2% at 62 compensation paid each pay period. We mentioned that a little bit and trying to simplify things around that with AB 1997. But of course, it's going to take some time for that bill to get through and get implemented. So we had this regs package that we had brought to you before, and I wanted to let you know that it's been approved by the Office of Administrative Law, and it's officially effective April 1st, 2024 on the quarter. But this is something that largely everybody was already doing. So it shouldn't be any shifts in practice, but wanted to let you know about the progress of that. And then the updates to penalties and interest regulations, which we had gone over at an earlier date. They were out for a public comment period. We had a public hearing at the January board meeting. We didn't receive any public comments officially, but with our pre-notice work on them, we had been doing some thinking internally. And so we likely will have some additional changes, minor changes that we'll present to our board at the May board meeting. So keep an eye out for those. What we'll be doing at that meeting is letting our board know that we're making the changes and that we're going to start a 15-day written public comment period. And so keep an eye out for those if you think you'll want to review them and be able to comment on them. So I think our board meetings May 1st and 2nd. I think we're coming to see you the week after. And so I can go over those specific changes at that point in time. And then you can submit comments if that's something that you think is necessary. On our AB 1667 regulations, so this largely has to do with the employer audits and appeals section of the bill. So different than what we talked about today. But we did have regulations that already existed prior to the bill. So we're looking at making updates to those so that they are in line with the newer law. And we have shared those with our work groups and folks that are interested in our regulations to get an initial review of some draft language we put together. And so we're still doing our work before we start the formal rulemaking process. So eventually, once we have gotten feedback and we work out any kinks, then we'll go to the board to approve starting the formal rulemaking process. So I'll keep you updated on those. And then last but not least, we had approval from our board to work on updating our regulations on our board elections. These don't go through the Administrative Procedure Act. They are just regulations that are adopted by our board. So it's going to be a slightly different process, but we are just currently drafting in the initial drafting phase internally. So we haven't even gone out for informal feedback yet. That's where we are on those 4 pieces. So any questions there?
Joycelyn, there's a question that came through the box. If you check your email really fast, about the separation from service.
Great, I can read it. Let's see. Can you share if there is any legislation that is suspending the 180-day separation from service requirement due to teacher shortage? I think it might be related to SB 765 and a misunderstanding at the district level that the exemption process is being temporarily modified and not suspended. Good question, thank you. I am not aware of any legislation that is suspending the separation from service requirement for everyone. So SB 765, as that email reiterated, just changed the process for getting an exemption. It took out, the biggest thing is it took out the need to get board resolution or board approval of that. So that's a time-saving measure. So you don't have to wait till the next board meeting or the next agenda that you can get on, but it does not suspend the exemption. So good clarification. And again, I'm not aware of anything that's changing that at this point in time. Again, we have till February 16th and everybody introduces their bills at the last minute. So it's possible, but I haven't even heard a whisper about that at this point, but I'll keep you posted. Thanks, Kim.
I don't see any other questions.
Great, thank you, everyone.
Thanks, Joycelyn. Okay, so next slide. If you want to go one more, I will open the forum, but I just wanted to put the dates out there for our next 3 EAC meetings. May 8th, August 7th, and November 13th. Those will all be virtual in this same format. We're hoping to, get to a point where we can host an in-person session for you all. But for right now, for planning purposes, we just want to put these dates out there. And if any change arises, we will definitely let you know. So now we've come to our open forum part of the meeting. And this is really for any of the items that were on the agenda that maybe you thought of a question after the presentation was over, or there's something that's related to one of those things. So I don't see any hands. Hopefully you all got your questions answered up until this point. So as I mentioned, a short meeting today, but hopefully very informative and answered some of your burning questions about what was going on with us. And if you do think of any questions, that advisory committee at calstrs.com email address is always available for you, as well as the various email addresses that the presenters offered to you. This presentation, will be available after if you don't have those email addresses. All right, so I appreciate all of you being here. Thanks again. And also one more real quick note that a lot of the material that the announcements about the invoices and things like that we talked about earlier will be and are currently up on SEW. So make sure you're checking that announcements portion of the SEW page to make sure that you're not missing any information. That's a key place that we're trying to communicate with our employers. So make sure you're checking those. And again, if there's any other questions that you might have, please feel free to reach out to us. We're always here to answer them. Thanks again, and everybody stay dry.